All right, we're back. I'm excited to have a stellar panel of clean energy investment experts. Each year at gridCONNEXT, we've had an investor panel, and I couldn't be more excited about who we have with us today. We've got Nancy Pfund from DBL Partners, Kellie Metcalf of EnCap Investments, and Peter Fox-Penner of Energy Impact Partners, also a noted author among other accolades. Over the past 2 decades, which is when I started to get into the clean tech sector, clean energy investing has gone, really from niche to mainstream. And one of the key notable things that has shifted is solar and wind has become the lowest cost source of new electricity capacity addition in most geographies. People who track the Lazard data know what I'm talking about and the levelized cost of energy. Bloomberg NEF projects that renewables and batteries combined will capture 80% of the total 15.1 trillion invested in new power capacity over the next 30 years. And that doesn't even include the additional 14 billion or so that's going to be invested in the grid over the same time frame. With that as a backdrop, I'm looking forward to our discussion today. If you saw, it's going to be clean energy and grid infrastructure investing, accelerating the end of fossil fuels. So that's really one of the things we're going to dig into here. It's been a huge topic of conversation about, what type of speed or lack of speed will it require to make the transition. For those of you watching online, please type your questions into the stage chat. You can see it over on the right, and I'll try to track your questions real time while I'm asking my own. So with that, I'd like to start with you, Nancy. Nancy, first of all, it's great to have you back on the gridCONNEXT stage. So thank you. I know it's different than being in person, but easier travel. At DBL, you've been a pioneer in clean energy investing with early investments in Tesla, SolarCity, and many others. A couple of decades into this, because you've been doing this for as long as I've been tracking the sector, what are you currently focusing on? And I guess the question is, how is the world different today from when you first started as a VC investor, 2 decades ago or so?
Well, how about as different as Mars and Venus?
Yeah.
I mean, it's just so wonderful to be here in 2020, where the sense of urgency is all around us, where we're, as you noted, we're making up bigger and bigger percentages of the energy mix. We're going mainstream. There's a broader opportunity set, and there's certainly, while the field will never be apolitical, I think we all sort of know that. It's really moving beyond some of the polarization that we saw in those early days, and certainly the skepticism. I think that we're really benefiting from unfortunately, the effects of climate change are more widely felt. And so what that does for us, I mean, it's obviously there are more people, there's greater sense of urgency, and there's more to invest in. Some of the world's greatest entrepreneurs are now taking on climate change. And so we're able to really make a difference. We have a much healthier ecosystem of investors, from corporates to VCs to everything in between. And I would say that in terms of DBL, we've definitely learned from those early investments, the role, we electrified transportation. Now we talk about the electrification of everything, which I'm sure we'll be talking about.
We will.
The opportunity for storage in the developing world. And then other sectors, frankly, we just go around and see, where's there a lot of carbon? And we've got to change that. And because we are impact investors and we want to move the needle. So that brings us to agriculture and conservation and even space tools. And
well, that's a quick follow on before we move to the other intros from the other panelists. But DBL stands for double bottom line, right? So yes. How do you see the worlds of impact investing and energy investing now intersecting? Because they're a bit different, right? But there's that overlap you started talking about with ag and what have you.
Sure. Well, of course, we've been both sustainability oriented and impact oriented since inception. And so we kind of see it as a subset. I mean, sustainability for most impact investors is one of the most top of mind, most popular segments. And it's not the only one. There's financial inclusion, there's healthcare, but certainly sustainability is on the minds of many impact investors. And so I would say it's the biggest subset of our practice, in part because of the need, but also because we're super interested in that. And it really is, in impact investing, you want to do something that changes the world, that moves the needle. And so climate change and sustainability really rise to that level of impact. And so I would say that even though they're all kinds of threads now, they all come, like diversity and inclusion and economic empowerment and things like that. They all are now part of our lexicon for climate investing as well, as we really take seriously the very legitimate area of environmental justice, for example, which I'm sure we'll talk about.
Yeah, well, great. Well, let me move over to you, Peter. You've written widely, as I mentioned earlier, on the grid of the future, including your most recent book, Power After Carbon. I recommend it to everyone on here to check that book out. So much of investor focus is on renewable generation, solar, wind. I mentioned that earlier. But I'd like to get your read on what we might expect in the next decade with regards to the deep decarbonization of the grid itself. What areas are you focusing on from an investment perspective at EIP and just your tracking of the space in general when it comes to the grid?
Thanks, Ron. Great to be with all of you in the audience, and of course, Nancy and Kelly. So our thesis at Energy Impact Partners is basically to invest in the clean energy transformation, and particularly the clean electricity value chain, really from end to end. And we invest all the way from deep decarbonization and generation and storage and upstream technologies, as I like to call them, all the way down into smart grids and smart thermostats like Ecobee we own part of. So we invest all along that value chain. Some of the things that are interesting to us these days are customer technologies where we're helping utilities digitize and improve their operations, often with AI and machine learning. Smart grid applications have really come into their own. There's lots of interesting smart grid technologies, including control technologies like Opus One, one of our companies that's doing the DSO architecture for 2 distribution utilities in England. Cyber is very, very important and increasingly important as the grid digitizes and gets smart and it gets grid edge intelligent. Of course, renewables, we continue to be bullish on renewables. Mobility, we all understand is important, whether that's cars or scooters, chargers, which we're involved in. And then we've started a deep decarbonization fund and have just done our first investment in Form Energy, which, as some of you know, is a long-term seasonal storage technology. So across that whole sector, there's lots of good action.
Great. Well, we're digging a bit more into some of the portfolio investments you're all making. Kelly, I'd like to move over to you. Your career is focused on clean energy for more than a decade. You were previously at Pattern and now as part of the energy transition team at EnCap. EnCap as a firm has traditionally been focused on oil and gas. And you're based in Houston, right? And we had Sylvester Turner on earlier this afternoon. So can you tell us a little bit about how EnCap made this decision to enter the energy transition space, and maybe a little bit about how things are going since you launched it, about a year ago or so?
Yeah, about a year and a half ago. Thanks, Ron. I appreciate the opportunity to be on the panel this afternoon. And actually, I've been in the renewable space, for about 20 years. I started with a family here in Houston, the Zilka family, at a firm that ultimately became EDPR. So been around the wind and renewable space for a long time now. I have 3 partners here at EnCap Energy Transition Fund, and we've been together for about 2 years, and 2 of the partners have actually been together for longer than that, 4 years. We were originally funded by another private equity firm out of New York. That firm ultimately had trouble raising a fund from which we were going to be receiving our capital. And at the same time, one of my partners, Jim Hughes, who's the former CEO for Solar, actually was talking to several funds here in Houston and got a call from EnCap. And EnCap, well, it's an oil and gas private equity firm that's been in the business for 32 years. They are, innovative in some ways, I think, which is hard to put that moniker on oil and gas investors sometimes. But about 12 years ago, they saw that they needed to branch out and actually move into the midstream. So they went out at that time and found a group that was expert in the midstream. And so about 5.5 years ago, they looked around, realized that they really needed to be in the transition space, to be investing in renewables and technologies and companies that were going to take us to the next place that energy is going. And different than some firms, EnCap didn't look to take someone who was an oil and gas investment manager and turn them into a renewable investor, but rather they brought in Kinsey and did studies and did a lot of kicking of the tires of different teams and teams with different expertise. And they actually did that process for about 2 years. And then we went and met with EnCap. And frankly, there was just a very common language that we spoke and a very sympathetic way that we both approached the market. We build EnCap and the EnCap Energy Transition Fund. We really look at teams that are going to develop pipelines and operate assets in the transition space where we can help them with the expertise that we have in wind and solar and investing. And so it's been a great ride. It's been an interesting ride because in a lot of ways we'll go to talk to the other partners at EnCap, try to explain projects and companies and analogize to upstream. Oh yeah, that's like a pump jack. Okay, yeah. Don't worry. It's, merchant energy is like natural gas on the NYMEX kind of thing. So it's been very good. It's a very good relationship. Things are going well.
Quick question, Kelly, and then to all of you. How large is the fund right now, and what are you targeting?
We're in a fundraise, and so I'm going to defer. Don't want to get myself in trouble, frankly.
Got it. And Nancy, in terms of what you can tell us about in terms of how much money you've deployed over the years.
With the constraints that Kelly mentioned, we've got, our first one was 75 million sort of over the years. We're probably close to $1 billion now.
Yeah, that's what I thought. And Peter, do you have any numbers on your end?
We have about 1.3 billion of assets under management. That's about as much as in several investment vehicles. We're broadening our investment platform to include infrastructure and deep decarbonization, as I mentioned.
So it's become pretty significant. I mean, if you think about Nancy and Peter, EIP and DBL, that's considerable capital. And Kelly, you guys have started, so it's interesting to look at that. Well, I know we don't want to get too political, but I'm going to jump right in with a political question. We do have a new administration coming in. Not only will there be more support now for climate and clean energy and all the things that we work on from the incoming administration, there's also, really clear support from corporations, from large investment houses, banks, from the public, really. I mean, nothing really polls as high as clean energy. It's always in the 70, 80% range. So I guess question is, I was going to really ask you what you think the Biden administration will do, but I want to change it up a little bit. If you had a wish list of what the Biden administration might do in terms of some actions, so we'd love to know what you think those might be. Nancy, do you have some thoughts, and we'll go round robin?
Sure. I mean, how much time do we have? But
we got a bit.
Yeah. Well, I mean, certainly anything that levels the playing field for the new entrants versus the centuries-old incumbents, because we know that there's a lot embedded in that incumbency relative to regulatory capture and all kinds of advantages that aren't necessarily shown on the balance sheet. So things like, the subsidies, reforming that, the methane pollution limits, if those could have some teeth, that would show up in terms of leveling the playing field for oil and gas. We're very interested as an investment theme in the growing transparency that consumers are demanding across the board from their products. And so that extends to disclosure requirements on the part of corporations and all organizations really relating to climate risk and exposure and the quantification of the carbon embedded in their business models. And that, because that, quantifying it is the first step toward adjusting it in terms of price signals. So those would be some of the ones that we're really interested in. Obviously, incentives that not just for mobility that we've seen or for solar and wind, but also to redistribute the benefits, to help to redistribute the benefits of the clean energy transition across all income levels and neighborhoods, because there have been states that have had programs that do that, and they've always really worked well, but doing that at the federal level would put a whole new opportunity in front of us. So those are just a few.
Pierre, what's on your wish list for federal policy in a new administration?
Too much, but as Nancy mentioned, but I will say that what I wish for is really very much builds off of Biden's climate and energy plan, which is, as he has often said correctly, the most ambitious plan by far that any president's ever run on. I'll start with the sort of clean energy standard that is in there, the EECES, Energy Efficiency and Clean Energy Standard. I think that would be fantastic, but I have recommended and am advocating for broadening that to include what I call a policy trifecta of that standard, required state or regional planning for energy decarbonization by 2050, and a very significant energy infrastructure fund tied to those plans that buys them down where the infrastructure isn't ready for the market. Obviously, solar and wind you can finance all day long, but some forms of storage, some forms of grid, and so on. And that pairs up with the planning element where we need, I think, more attention to building large-scale grid, not necessarily a coast-to-coast DC super grid, although if one dropped out of the sky, I wouldn't object to it, but more transmission planning. Besides that, on my wish list, a huge energy infrastructure program for cities, and not just anything, but I think housing. We have a housing crisis now in the US, and we had it before the pandemic. Now the average renter is behind $5,000 and some dollars. So we need much more housing built. We need federal assistance for that, and it should all be green decarbonized housing, thus creating a win-win. And finally, a little small footnote, appliance efficiency standards, which the Trump administration just absolutely stalled.
Yeah, no, those all sound amazing. And earlier this week, we had Angelina Galativa from Cal ISO. We had New York ISO on, and they were talking about, cooperation among the grid, because we need to move these electrons from renewable sources to centers of usage. Kellie, how about you on the wish list?
Absolutely. I'm going to piggyback on Peter because I think it's huge, the infrastructure, the grid modernization. And again, it doesn't have to be east to west coast, but we have got to improve the U.S. electricity grid in a big way. So that's probably the biggest on the wish list. I think other things on my wish list are probably already happening. Some changes at FERC, getting someone like Rich Glick in there who's going to be on the right side of MOPR, who's going to continue to push 841 and policies that really don't inhibit renewable deployment on the and then I would, maybe surprising to some, but I would say I don't want to see PTC, ITC extended because I don't think that our technologies need that anymore. I don't think wind, I don't think solar, I don't think storage, absolutely don't need the ITC, especially in the form, or the PTC in the form that they are, because there's just a lot of friction in that process, and it's a game of haves and have-nots as you look for tax equity investors. So I would say that that subsidy in that form is not helpful for the type of expansion and renewable deployment that we're going to need to see in U.S. renewable and storage. And I would also say, let's look at tariffs and evaluate what's really helpful and what's not helpful. Some of the tariffs, and I know that Biden administration is talking about leaving the China tariffs in place. I'm not sure that that's the best course of action for our industry and for the economy and the green economy.
And can I add one
Kelly,
more?
I'd ask.
One more.
Yeah, please, Nancy. Of course.
Angelina, right after she was with you yesterday, we had our UC Davis Energy and Efficiency Institute board meeting yesterday and today, and she did talk about the need to better coordinate and to address the silos, and Elliot Mainzer was there too. So I think that if you get leadership on that level, it would help bring these more efficient grids. But the one thing also that you're seeing at a local level is the natural gas phasing out, and programs like the CEC is doing writ large at the federal level around the all electric building solicitations. The federal government procurement cycle could really help show people how this is done.
Yeah, and it's actually obviously happening a lot in California already. And Kelly, just to reiterate, when I was talking about New York and California, they weren't talking about together, but more regionally nearby. So of course, and then you grow the grid.
Yeah, Ron,
Kelly, yeah.
I'm sorry. Can I piggyback on some of these?
Of course.
Just to add to, you might say, to the wish list. There was things in the Biden's plan about rebuilding American manufacturing, but I think that there should be much more focus on this. Again, responding to the pandemic, and in particular, the kind of manufacturing jobs that will bring electrification and decarbonization to industry. I think that's kind of the new frontier. I think we are well along in decarbonizing our energy supply. We've got a ways to go, but hydrogen's coming. The power grid's well along. The use side, which has some very, very long capital cycles in industry and some really new needed technology breakthroughs, that's where the federal government could make an enormous difference and bring back manufacturing jobs at the same time. So I think that should be a big priority of the new administration.
Well, I think we should all get these ideas together and figure out who to send them to. But actually, at GridWise, just so you know, I mean, Karen Wayland is involved, and Steve and Richie, they're working really hard. They have a number of different policy initiatives they're working on. So, Kelly, I would say one thing, I understand getting rid of the PTC, ITC, and that can be effective. I would only say I want to see all fossil fuel subsidies taken away at the same time. And I'm assuming you'd agree with that. Nancy, you were very early in observing and talking about the electrification of everything. You mentioned that earlier. With new innovations and solutions, so you talked about natural gas as well. So, I mean, this to me seems like this electrification of everything is critical to decarbonization. It's also really painful. Like, I live in an old 1906 home with a natural gas furnace, but I got a heat pump up here in my office. So that's obviously just electric. I cook with natural gas at the moment. But, San Francisco, how many cities now are new buildings are going to have natural gas? So let's talk a little bit about electrification of everything. And then also, as part of that, what can the natural gas players do, if anything, in terms of RNG or what have you? What is this all going to look like over the next 5, 10, 20 years? Because this looks very disruptive to me.
Yeah, it's good.
So I'd like to start with you,
Yeah,
Nancy.
it's going to be difficult. We had the electric utilities and the gas utilities at this UC Davis meeting, and the gas people were not as happy as the electric people, as you might imagine. But it needs to happen. Mary Nichols and I were talking about this a year or so ago. She said, "Yeah, I want electrification of everything except my gas stove." Even Mary is like, "Oh, I gotta get my arms around that." But then there's a whole new generation of induction stovetops and things. So it's real, and it's so important, and it's a win-win. Except we are going to have to figure out the gas equation. But they can broaden perhaps their view of what their mission is. And it's the reason it's so important is we all know that it's a huge part of the carbon problem. And it's also something that consumers can really help to mobilize a solution. And so when, and there are 50 cities now that have put some form of a natural gas ban. Some places they don't like the word ban, so it'll get less dramatic in the way it's talked about, I think, over time, so that you don't alienate people. But it's happening. I think last week we got Oakland and San Jose added, in addition to the cities you mentioned. So from an investor point of view, we try to find, where are the innovations, where are the markets where you can make a difference. And so, because obviously when we chose to invest in cars, electric cars, it was partly because it was at the time 40% of carbon in California. And so so one investment we've made is called Bellwether Coffee. And you're like, what? It's a coffee investment. That's not a climate investment. But it turns out that the carbon footprint of your morning cup of coffee is horrendous. And it's a $225 billion industry. 400 million cups of coffee consumed in the US every single day. And so you've got your caffeine, but you've also got a huge carbon load there. I don't want to make people feel guilty. Enjoy your coffee, but increasingly we need to decarbonize it. So what Bellwether does, it's kind of a solar city for coffee roasting. Instead of the centralized hub and spoke gas-fired roasting that we all depend on for our coffee, it's a sleek electric roaster that goes into the Starbucks or goes into the Whole Foods, and it makes the place smell great. It makes the coffee taste better because it's more freshly roasted. It's cheaper, and it reduces the carbon content by 90% in terms of the lack of natural gas, and then the reduced transportation load, moving from a centralized roasting to a distributed. So very a metaphor of what we've already seen in other parts of the electricity grid. And so one of the things we like about it is that when we invested in Tesla, it was kind of like, well, it's risky, but people are like obsessed with their cars. And living in California, while we all like to take public transportation, it's not like cars are ever going to disappear from our culture. And coffee's kind of the same way. People are really into their coffee. They have rituals associated with it. There's a premiumization going on. It's a guilty pleasure. You can spend a little extra for coffee if you want to now and then. And so anytime you see a consumer attachment to a product category, like a car or coffee, it's a wonderful teachable moment, because those people, when you tell them about the sustainability side of what they're doing, they get it and they become part of a movement. It's bigger than just a product. So that was one of the driving forces. And I mean, it's a huge problem in terms of a beverage that, just like cars, is not going to go away in any of our lifetimes.
So Kelly and Peter, anything on the electrification of everything that you'd like to chime in on in terms of how you're viewing that?
Kelly?
If not, we can move on. But
go ahead. I've got some things. Maybe I'll be the diagonal counterpoint to Nancy on electrification. And let's be clear, Energy Impact Partners are all in on electrification. Our investors are 21 of the largest electric utilities in the world, and we believe deeply in electric mobility and generally electrification. But I don't think, as a policy analyst and their chief strategy officer, that we're going to electrify everything, and that the things that we can't electrify are actually ones that we need more, or at least as much focus, and probably more. It's not Mary Nichols gas stove, because first of all, we all love the Mary, but there are some high temperature industrial applications for which hydrogen's just, I think, going to turn out to be better, and we need to make sure that those can go. I think there are some buildings that will ultimately not lend themselves to electric heat, but may well use renewable natural gas or other things. So I think there is a third of the energy end uses in 2050 that won't be electrified, and they're harder. We're further behind on them, and we need just as much focus on them. which leads to a final footnote, perhaps, on the future of gas utilities. I think what's complicated about it isn't that there is no future to them, but it's a more complex future than for electric utilities, who have just a fantastic future ahead of them. Decarbonize the grid, probably double sales between now and 2050 for that which we electrify. But for gas utilities, they have to figure out how they evolve their single homogeneous product, methane, fossil methane, into some sequestered fossil methane, which I think will happen, some renewable methane, and some hydrogen, and some other gaseous fuels. And that's a complex future that we have to sort through.
Well, it's good you brought up the industrial applications. And I would say on this conference over the last 2.5 days now, green hydrogen and RNG have come up innumerable times, especially green hydrogen. And going beyond just it being a buzzword right now, I really think you could do a conference just on green hydrogen. So there's a lot that needs to be done, but thanks for pointing it out. And I am going to be really interested to watch this. So that takes me to another question. There's a lot of different feelings about when we can get to 100% renewable energy on the electricity grid. So again, this is a round robin. I'd like to start with you, Kelly, but I'd like you to pick a year that you think we can reach 100% renewables on the U.S. electric grid. And I know it's disparate, but maybe there'll be a holdout. But let's just say almost 100%. So what year do you think that is, Kelly?
Yeah, I'm going to go with 2050, but I'm not even sure it's really 2050, to be honest with you, because I do think, following what Peter said, that we're going to find ways, such as hydrogen, to run our combustion combined cycle and single cycle units to support the renewables and storage that are going to be on the grid. So I think right now that it's infinitely doable by 2035 to get to 75, maybe 80%. So I'll go 75, 80%. To get beyond that, you need very large scale seasonal storage. I mean, you have all the what's happens in the West with freshet and the runoff, and so you just can't do it without large seasonal. We have two front of the meter batteries.
Actually, Kelly, can we wait for a second? I want to come back to storage right after we do the round robin, then we'll go right to energy storage. Peter, what's your year for 100% renewable electricity on the U.S. grid? Not getting rid of natural gas, just for the electricity production.
Understood.
Yeah.
First of all, Ron, I don't think question's fair, because I think you should say decarbonized electricity. Because I do think we already have carbon capture and sequestration working in some utility scale plants. And we have nuclear supplying, heavens, 20% of our electricity today, and small nuclear coming.
I know, I'm too much a renewables cheerleader. Go ahead.
I love renewables, but our goal must be decarbonization, and anything that's economical and gives us a sound, environmentally sustainable and just transition pathway, we can't take it off the table. So for that, with that, 2050 for sure. And I actually think 2040 is pretty doable. It's all about how much we roll up our sleeves.
That's closer to mine, the 2040, but I would just say new nuclear perhaps, but I just, it's still always 10 years away. Nancy, let's go to you. 100% renewables on the U.S. electric grid.
Okay, well, I'm going to hold our feet to the fire, because my problem with these estimations is when they're so far in the future, none of us are going to be doing what we're doing. And so we have to be the change. So I'm going to say 2035.
Yeah, great. That was mine. Okay, cool. As 2040 was closer. All right, so
I think 2035 is doable, but it's a World War II type mobilization.
Yeah, and I don't want to.
I don't think our political system
out there.
Yeah, I don't want to split hairs here, but it's just been coming up a lot, so I'm really interested. And I want to challenge everyone. Let's go a little faster here, right? What are we all doing? So, as investors, as corporates,
when all of this happens.
Yeah. So now let's go to energy storage, because obviously solar and wind, they're developing very rapidly. The costs are there. We're seeing energy storage increasingly sort of like where solar and wind were 5 or 10 years ago, depending on which technology you're looking at. So I think it's rapid acceleration and change. but there's a lot of different chemistries and there's a lot of different ways to do this. So Kelly, I'll go to you first because I know you've been working on this, you all have, but let's just talk a little bit about what are some of the storage holy grails that are out there to get us to renewables grid, because we obviously need it for the grid.
Right. Yeah, I think on mass deployment, and again, as I mentioned, we at ETF have 2 front-of-the-meter large-scale battery storage companies, and we deploy LFP strategy. And so it's a matter of making LFP more efficient and more cost-effective. From use in California, Texas, throughout the grids in the U.S., I think it works. We're also looking at flow batteries. So flow in cities where you have issues with, New York City, I don't think you're ever going to put LFP in someone's basement. So we're looking at some flow technologies there. And then, we look at all the new things that come across, the inbox, if you will. But really, from large-scale deployment, that's where we see at least the next 5 years. Nancy
and Peter?
Well, I would agree with that. I would also say that new product formats for ion lithium and inverters that work to, say, avoid the use of diesel generators, both in the developed world as we have mandatory turnoffs due to wildfires, but also in the developing world where there are 800 million people that don't even have electricity. So it's not, I think that there's a lot more we can do with ion lithium in those environments. And then there are some of the more kind of long duration approaches that Kelly mentioned.
Yeah. The lithium ion continues to get better and cheaper, and I'm just amazed at the learning curve on it. And from what we hear, there's still quite a ways to go. Lots of technological innovation there and different subchemistries. But I think what is much more important, or at least proportionately more important, is the longer duration storage, because we need that for that critical last 20% of the grid, last 15% that Kelly was mentioning. I mentioned that we're incredibly excited about Form Energy, which is truly a seasonal storage technology and should be scaling within the next 5 years, and I'm also an advisor to EOS Energy Storage Zinc Air, which went public just in the last month or two. Which is also utility scale storage. So we are starting to see a broadening of technologies and chemistries into longer duration as lithium ion continues to clean everyone's clock on mobility applications and short-term applications.
So I have a lot of my own questions, but I'm also tracking the chat, and there's some ESG questions that have come up. At Clean Edge, for people who don't know, we have multiple different stock indexes tracking the clean energy economy. We tend to use, from the beginning, positive screens on companies that like Tesla and others who are actively involved, pure plays, mostly in the energy transition. ESG obviously takes some different approaches. It uses both positive screens and negative screens. I think one of the things that's come up with ESG is there's not a lot of standardization yet, but it's increasingly getting a lot of investment, right, from the retail side. But sometimes you look at a company, like, what are they doing as an ESG company? Like, it might not make sense. So just wondering from your perspective, I know you guys aren't retail investors, but how important is ESG movement right now to seeing the broader adaptation and acceleration of the sectors we track? And what do you think about the need for better standardization or clarity on ESG signaling to Wall Street and even to the oil companies? So whoever wants to go first, but I'd love to get your thoughts on ESG.
Well, I'll just mention it's a key driver of anyone's practice in investing in climate is to get that big prize at the end where you've got the index funds just automatically putting in these companies. So it's critical. And that's why I said at the onset that better climate reporting, better reporting of climate risk, and the standardization, I think that's all happening. And that's something that the federal government should be doing. And there, from what I understand, there's a lot going on that will make this a lot more foolproof and really show people where the stars are and where the laggards are. So
Well, yeah, and Trump was really trying to derail that ability for investors to think about the environment. That's obviously going to go away. But Peter
you
and
also
Kelly,
have the other countries that are, full steam ahead. So I think
right.
that with the new administration, there'll be a lot more commonality of interest.
Agreed.
Yeah, and I was going to jump in. I mean, I think we're all the E part of it, and so that's
Right.
not a problem at all for any of us. And when we go out, we're talking to limited partners every day. It's the S and the G. We've made big inroads. We, as our organization, before we became part of EnCap, were very interested in the social and the governance, and we've been able to impart on them and some of that S and G. But I completely agree. We actually just seeded our first female CEO in our solar development portfolio company, so we're pretty excited about that. We've got mandates that we have for our advisors that you have to have a senior woman on the team, those types of things. But what is the definition of ESG? Because we go to our portfolio companies and we say, we want your ESG metrics. And they come back and say, well, okay, what is a diverse employee? And it's not easy to answer. What is, how are you following the governance requirements? And so I do think it would be, we need to come together and give better definition so that people can get where they want to be. It's hard when you don't have a goal that you can see to just know that you need to be good on the ESG front. We need to have some parameters for people to follow.
Yeah.
First of all, I agree with Nancy that ESG it's just transforming our industry because it's sort of the broad investor community waking up to the value in what we do and getting interested in it. I also agree with Kelly's point that our fund thesis is primarily around E. So we're already way, as are Nancy and Kelly, way ahead of the mainstream market in E performance. And what we're doing, Energy Impact Partners, is now rounding out our practice and adding S&G metrics and measurement to our practice to kind of come up to best practices amongst all investors. There is, because this is really new, there is a huge lack of standardization. I have a project on that at Boston University's Institute for Sustainable Energy called IMAP, but there are many, many efforts underway to try to harmonize and standardize E measurements and climate measurements, as well as S&G metrics. It is going to take many, many years, just as it took many, many years to get financial accounting straight.
Peter,
and people still are.
Just
did you say IMAP?
Can I just give an example how, you do manage what you measure. We started out in 2004 measuring the number of women in our founding teams or in the C-suite. And back then the average was single digits. It's not that much better today, unfortunately. But since we tracked it and we were like at 20%, we're now at over 50%. And we drive that number. We look at it every single quarter. So so it really shows that if you have the metrics and you start to work them, then you figure out ways to improve your numbers and you can get to a much more equitable distribution of opportunity.
I was just going to say thank you for that, everybody, on that front. And Peter, maybe get some information on the IMAP project later and we can share it with others. And one thing I'd say, this past year, at least on the retail side, clean energy has outperformed ESG. It's been really, as you know, so this E piece, not only environmental, but energy transition. It's kind of one of the areas right now. I want to go to one other thing. We'll try to get maybe one or two more questions, and I'm still tracking these. Sorry, we can get to all the ones we had here, but I had a question. We've talked a lot about technological innovation. We just talked about ESG. I'd like to get a little bit more into finance innovation. So what are the innovations that you're seeing on the finance front? I have a question here, green bonds, sustainable ESG-linked credit. Just wondering real quick, are there any significant innovations you're seeing on the financial instrument side of the equation that people might want to be looking out for?
You mean besides SPACs?
Yeah. Oh, yeah. Hi. A lot of clean energy and environmental specs. Yes. Anything else, though?
Yeah, I would say, from a large scale, we make large scale investments between 200 and 300 million to a portfolio company. So we're not in those more niche products, but there are products on the hedging side for wind farms, as an example. There are guaranteed revenue swaps that will take into account, well, you have a counterparty who will guarantee the production to some level and the price per megawatt hour that is helping in the financing and is helping to get those projects across the line from a tax equity perspective, going that route. So I think the insurance industry has leaned into the renewable space and some products that are interesting.
Yeah, I know some of the large finance firms in clean energy are looking at innovations around the insurance piece. That's interesting. Something to look on. Anything else before we move on to the final question?
I would just say that with CRA, the Community Reinvestment Act, undergoing change, that there's some interesting efforts. They're not real yet, but to use the Community Reinvestment Act dollars to help drive more low-income solar and battery placement. And we're seeing just the beginnings of those worlds perhaps coming together, which would be awesome.
Right, because like community solar as well is different, but a lot of these community-oriented investment opportunities. Peter, did you have anything before we go to the final question?
Green banks are a good innovation. I hope the Biden administration puts in some, as I said, some large new infrastructure financing vehicles with federal backing. And we do have an interesting credit fund at EIP where the federal government does back investments in small businesses with federal interest rate debenture. So you can get essentially venture debt. That's a very useful financing for small businesses that's been really, really popular.
Yeah, that makes a lot of sense. And the Green Bank, we've had Green Bank discussed on this stage in the past. So thanks for bringing that up. And you're right, with Biden coming in, there could be more life for that. So we've been pretty U.S. focused on this conversation. I know, Nancy, you've done a lot in thinking about the developing world. I'd like to just close out a little bit by talking about the developing world. Last year we had Power for All on stage talking about what they were doing in Africa and India. So I'm just wondering, talking about modern 21st century grid, there are pretty vast differences between the developing world and the developed world. And, we had Hoffmeister on this morning, former president of Shell. He kind of took an approach that I was a little surprised by, where he said, look, in the developing world, they just need to keep doing a lot of, they're doing dung, let them get to coal. And I kind of feel like leapfrogging is the way to go. So let's just talk a little bit about, real quickly, from your vantage point, we're all sitting here comfortably in our developed world environment. In the developing world, someone doesn't have a lot of resources. How are they going to be part of the clean energy revolution? Nancy, can we start with you, and then we'll go round robin and wrap?
Yeah, thank you for bringing this up, Ron. It's such an important area. The first time I flew to Lagos, Nigeria, and I feel pretty proud about what our industry is doing and the changes we're making for the better for our planet. The minute I landed in Lagos, I was like, oh my gosh, everything we're doing is like not moving the needle because this is where the population's growing. There's no, the infrastructure is not anything that we would recognize. And as you say, they're legacy fossil intensive approaches. But and so on the one hand, it's daunting, but on the other, because you do have such a younger demographic, a growing middle class, you're really able to make some significant inroads. And so what we're excited about in Zola as a company that we've been working with started in that rural segment, which is good, but is not as scalable. But then we looked at developing a product and using Enphase and other kind of developed world technologies to allow for the places like Lagos, where people have diesel generators like in their living room almost, because the grid goes down several times a day and they don't want their air conditioning or their fridge to stop. And so everything is kludged together, and it's carbon intensive, to say the least, and a health hazard. So we developed a product that allows you to seamlessly go back and forth from the grid. You don't blow up your appliances. You don't have to do anything. There's no particulate emissions. And it's as cheap as the diesel generator solution. And this opens up a whole new opportunity on the continent, because all of a sudden you've got the tech companies that want another product to sell when they're going in to wire a new building. You've got the entrepreneurs really wanting, as you say, to leapfrog. And so this is a great business model because it's pan-Africa. It's not just one village at a time. We need both, and we are addressing both, but to really make it a business where it's scalable and it's a household name, you know, from Lagos to Johannesburg, you do need these new technologies. And we've just been very, very heartened to see Africa really start to embrace a scaled solution that goes beyond the early village efforts.
Great. Anyone else on the international developing world front?
Yeah, I was going to say it's because it's not only environmental, it's economic. These economies need the energy. And what we've been looking at considering is microgrids. It's not new, but microgrids, solar plus storage in a microgrid context and more of a village setting rather than a city, or it could be in cities. And it's something that you can also do for some disadvantaged areas of U.S. cities as well. If you look at that.
Right.
We think that's very interesting and an important part of the both economic development of developing countries and getting them where they need to be on the carbon without telling them they can't develop their economies.
The irony is that this diesel generator product that I just described, which is intended for the developing world, this fall and last fall here in the Bay Area, when our electricity was cut off because of the wildfires, you're like, wait, can we get that Zola product in Sonoma or Napa? So it is interesting how the exposure goes, to Kellie's point, quite broadly.
Well, in a good leapfrogging situation, that's exactly what we'd see happen. Peter, did you want to add anything before we wrap? I know we've gone over.
I just want to say that I think the proposition, with the greatest respect to Shell, which is a great company, that you have to not leapfrog and go down the same path.
That was John Hofmeister. He left Shell over about a decade ago. So I just want to clarify for that. Yeah.
Okay, good. Makes me feel better. But I think that makes absolutely no sense. You'd never go to a country and say, put in leaded gasoline for 10 years, and then we'll switch you to unleaded. Yeah. And then maybe we can do electric vehicles. Nor would you go to a country and say, put in copper wires to everywhere. And then after 10 years, we'll give you cell phones.
Well, some ideas are entrenched.
I think we all work with Shell Ventures. They're clearly not of the mind that your guest was.
No, they're all in on electrification.
All right, guys, leading a new charge at Shell with
but what I was going to say, just to wrap up, is that it's all about the capital availability. Getting capital to these developing economies is critical, because with the capital, they will build clean infrastructure. It's only when they're capital starved that they go back to dirty infrastructure, because it's lower first cost.
Well, I want to thank all three of you. This has been a fascinating conversation. I'd like to see people in person, but sometimes this seems it can work out. So I really appreciate you participating. I'm going to ask you guys to go ahead and click the leave button. My co-host, Steve, is going to join me, Steve Hauser, and then we're going to go into the final panel of the day. So again, thank you all. You can't hear everyone clapping, but the virtual claps are there.
Thank you.
So thank you.
Thanks,
Happy
everyone.
holidays.
Appreciate it.
Same to you.
Bye-bye, guys.